Hello and welcome back to a brand new video inside the FX Mastery Discord. This is going to be an 8:30 New York Open strategy. So the first indicator that you're going to want to be having on your chart is the ICT midnight and the 8:30 Open. This is just going to signify where the opens occurred and when you can look to see market order flow come into the market. So usually on the open, you'll see a surge in price. This will usually either break lower time frame structure or continue it. So you're going to be following the clear market order flow on whatever the open does. Entry is usually within the first 15 to 45 minutes of the 1:30 session. So the 8:30 session, New York time. And then we're going to be looking for fib retracements into our discount and premium for our entries. Timeframes I use for this are the 15-minute, the 5-minute, and the 3-minute. And the lower time frame, 5-minute and 3-minute, are just simply to get our stop losses smaller, meaning that the 1 to 2 risk to reward is a lot easier to hit. You don't want to be in this trade if you haven't hit the 1 to 2 risk to reward. You want to exit by 6 p.m. Again, you don't have to really move stops on this. You can if you want to. I personally don't, because I'm only looking for the 1 to 2 risk to reward. So that's just up to you. We're going to go over a few examples over the last couple of weeks just to show you this method and how it works. Obviously, you want to take into account certain things that you've learned in the past, like Asia Open, Midnight Open, and then what sides of liquidity on the higher time frame have been taken. So again, you want to take everything into account, but this is going to be our overall strategy. So you can use this, but obviously we'll have a less success rate if we don't take other confluences into account on the trades. So that is just breakdown of what the strategy withholds. And now we'll look into some examples. So as you can see, yesterday, Tuesday, the 12th of December, was a perfect example. So this is what I would be looking for. So we saw buy side liquidity get ran on market open, with then closed back down underneath bearish, right? Huge bearish candle. So this can signify that we're going to come short because we're so far above Asia session. As we know the price likes to come back to an equilibrium by day end or come near to an equilibrium. So my personal entry was at 960. And as you can see, I took it off the 15-minute candle into this breaker block and caught a pinpoint entry. This was also a 5-minute FEG and 5-minute break block. But again, you can go and back test these trades. So 5-minute breaker block, 5-minute FEG. We then took the trade into short-term 5-minute rejection block / liquidity. And that is where we took profit for the 2R risk to reward. But again, other confluences did come into play within this trade. We were miles above Asia and midnight open price. So then that is why you can see I was looking for a short on this bearish order flow coming into the market. Monday, don't usually trade Mondays, but we did have another opportunity. So as you can see, we had the 1:30 open. We've then taken out this buy side liquidity within this 15-minute wick here, back into a premium to sell short into this low, and perhaps this order block down here, which price then came into for another nice risk to reward of 2R. We also took Asia high before this order flow came back down into this FEG / order block down here. So again, Mondays don't really trade them, but that was an opportunity as well. Thursday, last week, don't trade Fridays. We can ignore Friday price action for New York. You don't want to be trading New York on a Friday. Thursday was another nice trade. So this was a continuation trade. As you can see here, we have the 1:30 open, clear market order flow to the upside. And as you can see, we had some nice levels of liquidity that needed to be taken out. After, you can see London, we took out these sell side liquidity lows. So what happens after sell side is taken? We usually head for buy side. And as you can see, the retracement occurred in New York. We then had an FEG entry, probably a lower time frame 5-minute order block within here. And that was our entry for the 2R. Again, you can hold some partials on your positions on this strategy, but I personally like just getting out of 2R and just calling it a day once we've hit that. Wednesday, we didn't do much, more of a consolidation period. But again, potentially there was a trade within here. We took out buy side within this wick on London high within the 2 o'clock candle. So open was around here, I do believe. We've then taken out buy side straight away. So again, you can look for lower time frame 1 to 2s just into liquidity. We've then sold off. We failed to make a new high. We've then changed market order flow. So again, we could have took a short position anywhere within these candles here, and then just looked to take out this liquidity down here. But that was a 4-hour. Again, you're only looking for the 2 hours. So that would have been a nice quick trade for you. Again, you could have gotten on any of these pullbacks to take out this sell side liquidity. This Tuesday trade was again a nice one. We've had clear market order flow to the downside. We have clear sell side liquidity building up across these lows down here. Again, liquidity are our main targets within this trade setup. So we're just going to be looking for quick 1 to 2s. We've had price open. So where does price open? Price opened within this candle here. And as you can see, price opened bearish. So we've closed bearish. We've reacted from this 15-minute fair value gap. And then we've taken out the lows I was discussing earlier across here within the next hour of price action. So by 3 p.m., you've made your 1 to 2, and then you're out of the market. Finally, the last example for you guys. Obviously, you do need to backtest this for yourself and head down to the 5-minute, 3-minute to see where you would place your stop loss. Again, your stop loss positioning on this can be important. So you just want to cover any FEGs and order blocks that haven't yet been touched. And if they have been touched, you can actually lower your stop loss or to just below wherever that FEG or order block was fulfilled. And that will shrink down your stop loss, making the 1 to 2 a lot easier to hit. So within this trade, we have the 130 open, I do believe was this bearish candle here. What did we do on price open? We took out this buy side liquidity, as you can see here, into this 15-minute FEG. And then obviously we have a continuation trade on this. Market order flows to the downside, taking out this high within London here. Prices then reacted. We then saw the prices reacted, and we've got an entry on this wick within here. On the 5-minute time frame, this would have been an FEG candle. And obviously we're using our 15-minute open candle to gauge where price is going to head for the next hour or two. And again, that was a nice 1 to 2 risk to reward. So that is some examples of the 1 to 2 risk to reward 8:30 New York Open strategy. Again, we can see over here confluences if you do want to take a screenshot. And other than that, backtest it, see how it goes for you, and hopefully this can get you funded and make you some nice profits within the market. Other than that, I'll catch you all in the next video.